Good morning and welcome to the morning leap session for Quantum Leap Futures. My name is Doug McKay. It is Friday, March the 17th. Happy St. Patrick's Day to all my Irish friends. It is also quad witching, so it should be a interesting day to say the least. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. We create 4 different hypotheses in order to have a trade plan in place. We do not know what the market's going to do. We can only wait to see what the market is showing us and then use the plan that we've created for that scenario and execute on that plan. Nobody can tell you what the market's going to do. We can only react and have a plan ready rather than trying to figure it out on the fly. Have our trade levels, our different hypos set and ready to go. This is a subscription room, so if you're interested in checking it out, please send me an email at quantumleapfutures@gmail.com. This is not a commercial venture. There's no website. There's no blog. We do everything here live in the go-to and the pre-market session, and then we do live trading and analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades they see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so taking a look at what happened yesterday. Yesterday, our main hypothesis was a move down into the 78 to 74 level, find responsive buyers, and then start walking ourselves up towards that 93. That was hypo 1. Hypo 2 was a false breakout or a failure to break out and a rotation down towards the key line in the sand at 70 and the possibility of going down into that 67.75. We got hypo 1 playing out, and we just never were able to really get any movement to the upside other than testing that 2380 level again. And we just sort of chopped around in this low volume area as we filled in the auction yesterday. It was a very boring day all the way around. Taking a look at the news today, we just had Canadian manufacturing sales month over month. There's not a lot of news today. 9:15 in about 15 minutes. We have capacity utilization rate and industrial production. The big news will be 10 o'clock, the University of Michigan preliminary consumer sentiment and University of Michigan inflation expectations and the CB leading index. And then we've got labor market conditions, which is tentative. I'm not sure when they're going to come out. But the big one really will be prelim. The real news today is it's quad witching. We took a quick look at open interest right now. There's heavy open interest on both the call and the put side down at the 2370 and then up at the 2390 area. So we're likely to get a rotational day and go and test both sides of those levels. I'm looking for a real rotational day today and a lot of indecision as they try to cause maximum pain to both the puts and the calls. Maximum pain on the SPY is down at 239. What are we trading right now? We are trading 237. So between 235 and 239 is likely where they're going to pin it on the SPY. Okay, I always like to start my day just taking a look at the macro to micro and working my way down in the time frames. I use a simple candlestick chart, a 9 EMA, a 20 SMA. What I'm looking for is slope and separation of the two moving averages for the strength of the trend in that time frame, where it's being challenged or violated, and any candlestick patterns that I might see. We had a beautiful multi-year upward trend, challenged at the end of 15, beginning of 16, took it back. Then we moved up. Then we had this rising 3 continuation pattern on the monthly. We talked about this, and we went in and put in a new high, and we've got slope and separation. We don't even begin to challenge the trend until we're back in the mid 2200 range, down at 2247, 2240. 50, I should say. On the weekly, again, now we did violate the one-time framing. We were one-time framing up for the last 1, 2, 3, 4, 5, 6 weeks, and then last week we broke the low of the prior week, which is a violation of the one-time framing, and we were thinking that it was the first negative week, bearish week that we've had in 8 weeks, and we were thinking, okay, well, the likely come down and close this this technical gap down here, but off the FOMC, they baked in the rate hike, and what do? We rotate, and we're currently trading just near the high of the prior week. The high of the prior week is 23.8075, and we're currently trading it. So we have to watch that level today for a couple different reasons. I'll go through them in a few minutes when we get to the composite. But the trend overall is still up on the week. Even if we do come down, we don't violate the trend until we get into the 2340 area. Going to the daily, you can see that we had this FUBAR Mr. Sneaky technical gap that we closed. They came down, tested the 20, and then they got back above it. But we've lost some separation. We still have some slope, but you can see that we are seeing a bit of weakness coming in here on the daily time frame. As we move down into the intraday, you can see that we started to roll over and get a trend down, and then they went into this consolidation, took it back, put in a beautiful FUBAR Mr. Sneaky, kind of try to push a little higher. Then we come down and close the technical gap, and we've been going sideways since. But we are holding the 9 and the 20 right now. So they're challenging the trend, but they don't violate the trend until we get below the 2375 area on the 4-hour. Going to the 1-hour, you can see that we were starting to roll over and getting a downward trend, and since Europe opened, they took us back up in Europe, and we're currently above the 9 and the 20 and getting a possibility of a move back here. There is I want to put a asterisk to it. There is a naked cross right here, but the way it was formed, we spiked back up into it as it was forming, so I give it less weight. But just pay attention to it. It's at 2380, 50 area. I'll show you why I want to pay attention to it, because if we get above the 2380, I think the Globex high is 2380.75, and I believe that's also right near critical mass, and we'll get into that in just a minute. Going to the 30-minute, you can see we've got the start of an upward trend here. Got a little bit of a possible cup and handle formation. I don't know if it's set up properly. Let me just check to see if it yeah, it did set up. So let's take a look at this. Whoops. So primary target is 83. That number is going to come up again and again today. And then extended target is 84.75. Rim line is right at that 80. So those levels are all coming into play. And again, I'm going to explain all this in a minute when we get to the composite. And then you can see on the 15-minute, we do have a trend starting, good slope, good separation, and then on the 5-minute you'll see that that is again the same case here. So taking a look at the bigger picture, so here's our larger picture. Now going all the way to the gap update. This is a holiday here, but the 21st, which was a gap update, to today, the most traded price is still below us, down at 60 and a quarter. We have not shifted the VPOC on the longer time frame. We gapped up. We created this 3-day island top, okay, with the blow-off high, the adjusted all-time high, 23.98, the March high 24.01, and we tried to hold value right here at the 78, and then we fell out of value, okay, gap down, and then we came down into this this 7-day imbalance that had the microcomposite at 67. So we came down to the 60 area again twice, picked up buyers, accepted value higher, and then we moved up on the news on Wednesday, and then now we've got a 2-day microcomposite VPOC that is right in line with where we tried to hold value. So 78 area is going to be a very important level. Over underline is going to be the 25 and a quarter. If we get below the 25 and a quarter, we're likely to get a move down into the 71 area and the 67 area. But if we can stay above the 75, we're either going to chop around here and then push up into that 81 small resistance there. But then you've got that 83 level, and if we get above the 83 level, then I think we get a push into the 88 to 90 level. There's still that naked VPOC up here from the March 1st that's still up here at 93 on the daily RTH. The most traded price on this day was up here at the 93. So that's what we're looking at. Taking a look at the overnight. Overnight inventory is pretty neutral. It's neutral to negative. So if we do get above that overnight high, there's going to be shorts that are caught in the hole, and they might get squeezed, and where we could see a quick pop up into into that 83 level. And you can see that this upper distribution from yesterday, the LVN is right around that 81 area, and then the HVN in that upper distribution is 82.75 or 83. So taking a look at the RTH, moving our information over, we did just put in a new Globex high as we were speaking. We got a spike up to 81 and a quarter. It could even go higher. We do have news coming out in 7 minutes. So overnight high is 81 and a quarter. Our overnight low is not likely to change, down at 75 and a quarter, and that's sitting right on the value area low from yesterday. And then our daily ATR is running at 15.19. It is the last day of the week. The week open was 23.67.75. So take 23.67.75 plus 1 day's ATR, and that takes us up to weekly critical mass up here at 23.83 to the upside, and then 23.67.75 minus 15.19, our weekly critical mass to the downside is 52. And I doubt that we're going to get down to 52 today. It can happen, sure, but if we get below 52, then we're hitting critical mass. What does critical mass mean? Critical mass simply is a theory that as you come into the end of the week or end of the month, that if there's no chance or we're above the daily average true range, that it's unlikely that the week is going to change from a bearish to a bullish or a bullish to a bearish, that one side will give up and step aside, and we can get directional move into the close, in the direction away from the week open. So right now we're in a bullish week, and if we get above 83, we're above the daily ATR. That would put us back to the 67.75, and we're likely to get continuation and capitulation of the sellers. Our daily ATR off of the low, the upside is 23.90.50. So our daily ATR is above weekly critical mass, and we just have to move the downside daily ATR target, because we got a new high overnight, 81.25 minus the 15.19. That takes us down to 62. What? No, that's not right. 81.25 minus 15.19, 66. Okay, and then our current VPOC, and it could shift, but it's at 78.75. So we're right in balance right now, around the two microcomposite VPOCs, the 2-day, yesterday and Wednesday, and then the 3-day island top that we had created. So what do we expect today? I'm expecting a really rotational day. I'm not expecting a lot of expansion up, and I'm not expecting a lot of expansion down, but we're likely to get an outside day, okay, a engulfing day. Whether it's bullish or bearish, I don't know, but we're likely to test both sides of yesterday's range. So I'm going to be using the value area as guide. When we break out of value, I'm looking for the move up into testing the 81 and the overnight high. That is going to be a target, okay? And I would hope that we're going to get continuation up into that 83. A break of 84, I'm looking for a move up into the 88, and possibly coming up towards this 90 area and this naked VPOC up here at 93. Our weekly ATR off of the week low, our weekly ATR is 40.9625. So our weekly ATR, okay, average true range on the week, takes us up to 95.75. So speaking in a larger time frame for the week, we still have room to go all the way up into the 95. So this makes this critical mass more important, and any break outside of the range to the upside and a hold of that range, you've got to be thinking we could see a stronger move up and get into a trend into the end of the week, coming up towards this all-time high in June, and the all-time unadjusted high at 24.01. So my hypo 1 is open auction in range, move down towards the 75, maybe even a peak down towards the 73. Remember, open interest is down here in the 23.70 to 23.60. And our FOMC, return to the scene of the crime, is down here at 71. Any break below 73, I'm looking for a push down into that 71. So open auction, hypo 1 is open auction in range, a push down, find buyers, get a false breakout, come down here, and then rotate back up through and come right through value and range and come up into the 84 area and get a engulfing day, a bullish engulfing day. Hypo 2 is exactly the opposite of that. A open auction, okay, they test the one side up here. The heavy open interest is up in the 2390 to the 2400. They come up here, and then they rotate it back through and rotate down and get a bearish engulfing day with a move down towards the 71 area. Hypo 2. Hypo 3 is an open auction in range, a failure to get below the 75 and then push up come up here, come back and test the range, chop around in here, and then push up and get critical mass break and a push up into the 93 and possibly even into the 2400s and a new all-time high. It's not got as strong a weight to it, but it's something we have to consider to it. And then the least likely is an open auction, failure to get above the 85, and then rotate back down into the 70 area, chop here, and then fail and come back down here between the 62 and the 67 area. So those are my four main hypotheses. Going to gold. Going to gold. Gold is moved pretty strong. It's found some balance. And what did we say we were expecting yesterday? Okay, we were expecting a rotation around the 27, and that's exactly what we're seeing. We're seeing it again overnight. Key levels to keep an eye on at 23 and the 34. To 36 level. If we get a break above 36, look for them to push up into that 39.40, and but I'm still expecting chop today. Anything below 22.50, then I'm looking for a bigger move back down to the 18.6. And that's what I'm looking for gold. I'm expecting gold to get a rotational day as well today and just chop around between that 34 and 24 area. News should be out, so let's take a quick look at the news. So basically, a slight miss on industrial production. Expected 0.3, came out at 0.0, but better than the prior at minus 0.3. And then capacity utilization came out basically as expected, 75.4 versus 75.5, but slightly less than prior. Next news comes at 10 o'clock. All right, and we really didn't get any real movement, a little bit of a down move back into that 78 and back into this balance that we're in off of the news. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side. And happy Paddy's Day, everyone.